In today's video, we're going to talk about the conditional loan approval status and how you get through that hurdle so that when it does come up, you don't get stuck. Hey everybody, I'm Phoenix real estate agent John Cunningham with eXp Realty. And today I'm joined by my co-host, Tom Hemmingson at MarketLine Mortgage. Tom is the guy that I recommend to all my clients and my family whenever anybody needs to get a loan to buy a home or they want to refinance. He's the owner of MarketLine Mortgage, and he and I have been serving clients together as a team for over a decade now. In other words, you're in great hands when you work with Tom.
Tom, I was wondering if we could start with the simple question and answer to this question: what exactly is conditional loan approval?
Sure, thanks, John. So conditional loan approval is when you submit that application, we gather all of your income and asset documentation, and we turn that into the lender or to the underwriter. Upon that submission, what we are wanting to see come back is what they would call a conditional loan approval. That means that the underwriter has looked at your income and asset documentation, they reviewed your application, and they're saying, John, I want to give you that loan. I do have a couple of questions, AKA conditions, to substantiate that approval, and could I get that additional documentation to get you through the process to a full clear to close loan approval?
Okay, all right. So a couple of things are coming to mind right away that have happened in the past. You've seen them, I've seen them, and I just kind of wondered, for our viewers' sake, if you could talk about what happens if somebody has some additional income. Let's say it's a construction worker who is constantly doing side jobs. How's that piece get handled?
So John, great question, and we do have it a lot. Hopefully what we're going to see is that contractor or somebody that has some self-employment on the side business is that they're reporting that on their tax returns. You will find that an underwriter in general is going to look for the last 2 years' tax returns to support that additional income. So
Okay.
Hopefully we can go to your Schedule C, or we can, if you have a separate business return, what have you, we'll look at those returns and then we can give you credit for both sorts of income.
Okay, and hey, while we're talking about income, I'm thinking about a client that you and I recently shared. We'll just call him Robert. And Robert recently bought a home, and he's got a big time, great paying sales job. But with his company, he has moved from full-time employee to somebody who is on a sales commission basis and receive some bonuses and so on. That complicated things, but we were able to get the transaction done. He was able to buy the house. If you remember this client, I'm sure you do. But tell me about how that's handled. Just because somebody's got great income doesn't automatically mean that it's going to be counted. And how is that handled, and how did it go?
Definitely a sticky situation. It's one of those to where if you are a potential buyer, if you're thinking about buying a home, to be able to secure that financing prior to making that transition into a full commission job or a heavily weighted into commission job would save you a lot of trouble, a lot of lost sleep maybe. But I would say what we would do is we would go back to that employer and start working probably through like a written verification of employment versus using pay stubs to see if we can't support enough base income within that new job to help them qualify without that commission income. Because you'll find that heavily weighted commission, brand new in commission, those income figures just are not very usable for a loan process.
Yeah, and I remember this guy, actually, even though he had been at the company for quite some time, and anyone listening to this video would recognize the company name, but he actually had a little bit of difficulty getting the HR department person to write the necessary documentation to support the facts, right?
That's correct.
Ultimately, what happened? How did we get that done?
So after, a lot of prodding, a lot of getting back to the HR contact, a lot trying to boil down what was a guaranteed part of income versus what was then subjected to randomness based on those commissions, we were able to find that we had enough of what was guaranteed within that new role to get him over the hump on debt to income ratio. Obviously, that's the big thing that we're trying to cure when you're talking about income. And so it just takes a lot of time. Sometimes you have to go back to the same HR person or employer a number of times to help them understand what we need to specifically get over that. But that's where I think having somebody that's knowledgeable in the business that understands how to get through those items is worth its weight in gold to make sure that you can get the loan, even though I think in general you think you deserve it.
Yeah, I know when everybody was kind of freaking out and biting their nails, you were calm and steady and certain that things were going to work out. All we needed was for the HR department to do a couple things, and once they did, everything went quite well.
Right.
So that was a good outcome, Tom. Let's do some more of those.
Absolutely.
How about if somebody is new in a job, freshly out of school, and they are just beginning to work, let's say as a nurse, and they don't have a lot of history, could that come up as a condition in a loan and put them in a conditional status?
So it does. The great news, and what I would want people to know, is that just because you're brand new in a job doesn't mean you have to have a year or 2 years worth of history to be able to get that loan. So as a W-2 employee, we could even put FHA is a little bit stricter where they want to know exactly what you've done the last 2 years. So we could put that school transcript to meet the last 2 years and then put the job income. They're just going to want to see 30 days of pay. On a conventional loan side of things, though, it's a little bit easier because once you get that first pay stub, you could close that loan immediately without having any job history, as long as it's, hey, I'm going to work 40 hours a week. Here's what my hourly rate is, and get through that process. So you can get a loan immediately, even in a brand new job.
So would that be the same for other professions like teachers, people fresh out of school, just started teaching, same thing?
Absolutely. The ones that I would tell you don't fall into that bucket would be the person that comes out of school and gets into a full commission job or self-employment where they have no history of that. That would be the one that gets pushed off. But outside of that, any regular job income would be good.
Okay, so if somebody, that's probably not even going to get that far in the loan process, I would imagine, during your initial consultation, if they say that they just started working construction or as a 1099 especially, they're going to need a couple years history, right?
Correct.
Okay.
Correct.
So what about somebody who's like driving a truck? You know, those guys make a pretty good income, but their paychecks aren't always as, I guess their paychecks aren't always like a traditional one.
Right. They can be a little tough because sometimes they'll get per diem, sometimes they'll get overnight pay for staying someplace out of sorts that is not, historically speaking, easy to count. But this is where I think you have to be able to creatively think through, how do I get you from point A to point B? And pay stubs may not be the best answer for that person. We might go back to the employer to do written verifications of employment to decipher down base pay versus other and see how do we put the puzzle together to make it work. But we can absolutely get through those. I mean, we've had plenty of truck drivers. I mean, I can think of one that even works out of California, lives primary residence in Arizona, and we were able to get him financing. You just have to be able to paint the picture.
So Tom, what about the condition of gifted funds? So somebody is ready to buy a house. They've got, maybe they've got their down payment, but not their closing costs, or whatever the case is, they need a little extra money. Mom and dad gives them some money. Talk about what the underwriting department is going to want to see in order to get past that condition.
It's a great question, and I think it goes back to the point of, if you set up the documentation right up front, you find that it's easy to get through. But it would be a copy of that gift check. If they give it to them in a check, it would be a proof of deposit into their account, so they know that they've got the funds in there, and then a gift letter. Sometimes where you find that it gets a little harried is that if they give them cash, that's tough. Or if they've already made the deposit, and then you have to back into getting the check from the parents and everything, which is a little bit more laborious that people don't want to do a lot. But all in all, if you set it up right, getting through gift funds is easy. Okay.
So nowadays, you know, a lot of transactions for a lot of things are electronic. They could be something like a bank transfer. They could be a check that you initiate through online banking. They could even be like a Zelle deposit. You know, I don't know if you've ever used one of those apps where you can transfer money to another person from an app that's linked to your bank account.
Right.
It works beautifully. But in any case, all those those transactions just have to be documented, right?
Absolutely. It's just a matter of an underwriter wants to know that the money came from the person that you said it came from and that they had the ability to give that money to you. Outside of that, it's simple.
So don't bring a $10,000 bag of cash to Tom or John and ask them to put it towards the house.
And the title company won't take it either.
Yeah, yeah. So Tom, tell me this, when somebody is in conditional loan approval status, a lot of times I've noticed it's not just one item, it might be 3 or 4 items. And I noticed that Annie, your processor, is able to help people get out of the conditional loan status into full loan approval status. You and her work together beautifully and help people move towards that. And while everybody else is sweating and worrying, you guys just know that it's going to get done, right?
Right. I would say Annie is awesome. And so she really runs that for us. And it does that. It's one of those to where you try to handle as many of them as you can without maybe the borrower needing to know, because I know that buying a home is already stressful. And so you need that teammate, that player that is going to go and run the ball for you without you having to stress every single day about getting through the conditions, because the conditions could be very few to a lot, just depending on, tax returns or not, how sticky the bank statements are or not, et cetera. So having somebody like Annie to run that for you is worth everything.
So even somebody who is a 1099 worker who is working as an independent contractor, they can get a home loan too. They might run into some different conditions than somebody who's a W-2. And what is the most common issue with somebody who's a 1099 employee?
Well, without a doubt, the number one problem for your 1099 self-employed borrower is that they try to write off every piece of income that they can to minimize the taxes that they pay to the federal government. So we get a lot of times where I'll ask somebody, what do you make? And they'll say, I make 50 grand a year. And I'll say, okay, you're self-employed. Yep. Okay. So after your business expenses, what do you make? And then all of a sudden you hear 15,000 or 20,000 because they've written $30,000 or $35,000 off of that top line number. We unfortunately can only use the after business expense number to help them qualify. They do not get to use the number before their business expenses. We do get to add things back in like depreciation, because that's more of a fictitious write-off for tax purposes. But in general, that's where I think the big hurdle is for your self-employed or 1099 contractor.
So that's what we have to say today about conditional loan approval. It's not something that you've got to worry about. It's a normal part of almost every single loan process. I mean, if we do 100 loans during a year, there might be, 5 or 10 at the most that don't have conditions, right?
Oh, and that would be high. I would say one out of 100. So
see, it's just something every loan is going to go through. Every underwriter is going to scrutinize a loan package, and they're just going to want to make sure that the bank is protected. So it's not something you've got to worry about. It's just something you've got to expect. Conditions will come up, and we'll help you clear those so that you can get the home that you want. Now, as I mentioned at the beginning of the video, I've got something for you, and it's called Moving Kit. It's going to help you save thousands when you buy your next home. All you've got to do is go to getmovinghit.com, and Tom also has something that'll be a cost saver for you. What is that, Tom?
Yeah, John, for our viewers and for anybody that mentions it's coming through the video, is that we will offer and give a full appraisal refund at the time of closing. So part of the appraisal process is a little bit new for folks. They do have to pay for it up front, but at the time of closing, we'll give them a full refund, and that's somewhere between $500 and $600 depending on the transaction. So
in order to get my moving kit, just go to getmovinghit.com and put your name and email in there, and you will be in on Moving Kit when you buy and close a home through me. Make sure to check out my video series on the home buying process, and I've got a video that you want to check out about the Roosevelt District in downtown Phoenix. Make sure to check that out. I'll see you there.